Four Roses, the iconic Kentucky bourbon, is up for sale. But why? Welcome to Kanpai Planet, I'm Mac, and today we're digging deep into what this sale really means. On the 24th of October 2025, the Financial Times reported that Kirin Holdings had put Four Roses up for sale and is working with UBS to test market waters, according to two people familiar with the matter. Deal or no deal, Four Roses on the Block is a telling object lesson in how Kirin views whiskey, capital, and strategy versus heritage. Founded in 1888, Four Roses is one of the great names of bourbon country. The distillery in Lawrenceburg was built in 1910 and is listed on the US National Register of Historic Places, and their production is unique. 2 mash bills and 5 proprietary yeast strains combine to create 10 distinct recipes. That DNA underpins everything from standard bottles to premium expressions. At the start of the 2000s, the brand was all but dead in the US after years of being sold as a low-end blended whiskey, while its bourbon production was for export only, in large part to Japan, with exclusives like Black and Super Premium that built a loyal following. By the way, a new owner needs to decide whether to keep those or unify the line globally. Personally, I'd be stocking up on a few of these things right now. Kirin acquired Four Roses in 2002, buying both the brand and the Lawrenceburg site out of the breakup of the Seagram Spirits empire. At the time, it was a bold play, securing not just a piece of Kentucky heritage, but an on-the-ground platform in the American spirits market, and they immediately restarted bourbon sales in the US. Financially, Four Roses is no basket case. It's a top 10 bourbon brand by volume, shifting 1 million cases in 2024, with the FT citing $70 million in adjusted earnings. However, bourbon is facing significant macro headwinds after its recent boom. Data shows a US market in retreat, younger consumers drinking less, mid-tier growth showing limits, tariffs complicating exports, and years of aggressive capacity expansion leaving warehouses heavy with stock. For Kirin, a company increasingly allergic to sluggish or volatile sectors, holding onto a bourbon brand that may need heavy investment just to keep pace looks less attractive. So, why sell now? To answer that, we need to look at Kirin itself. Known worldwide for its flagship beer, Ichiban Shibori, Ichiban outside Japan, Kirin is far more than a brewer. With over $15 billion in sales, it spans alcohol, soft drinks, food, and increasingly pharmaceuticals and healthcare. Kirin's health pivot started in the 1980s, but accelerated in recent decades, investing in rare disease medicines via consolidated subsidiary Kyowa Kirin, and growing through acquisitions like Blackmores, Australia's largest vitamin company, and Fancl, the Japanese skincare and supplements group. The numbers show the shift. In 2024, Kirin reported total revenue of 2.4 trillion yen. Alcoholic beverages accounted for the majority of that, but the non-alcoholic segment grew 9.4% year on year, taking it to 560 billion yen, while pharmaceuticals and healthcare together added 670 billion yen. Kirin's 2027 long-term management vision explicitly prioritizes growth in non-alcoholic drinks and healthcare. Against that backdrop, cashing in a US bourbon asset and recycling $1 billion into faster-growing segments looks entirely rational. But Kirin isn't walking away from whiskey altogether. It's doubling down, selectively. Its Fuji Gotemba distillery, founded as a joint venture with Seagram and Chivas brothers, is capable of making malt, grain, and blends on site. They released their first single malt in 2004, but after 15 years of award-winning but mostly unfocused releases, their activist investors pressured them to ramp up their beverage business and expand overseas. Kirin responded with real money, an 8 billion yen upgrade in 2021, new stills, new mash tuns, and 20% increased warehouse capacity. And the Fuji lineup was born. Single grain in 2020, single blended in 2022, and single malt in 2023, plus limited edition prestige bottlings like the 50th anniversary editions. Kirin even targets a tenfold increase in exports from 2021 to 2030. In short, Kirin is betting its spirit's future on domestically produced Fuji. If you want a precedent for Kirin's logic, look for how they handled their ownership of the now cult Karawizawa distillery. Karawizawa owners Mercian became a consolidated subsidiary of Kirin in 2006 and a wholly owned subsidiary 4 years later. Whiskey fans hoped the distillery, mothballed at the end of 2000, would be restarted. However, Kirin's real prize was Mercian's wine business. So, in 2011, they sold the remaining 364 casks of Karawizawa whiskey to No. 1 Drinks, and in 2016, they demolished the site. Fast forward, and 2025's Once in a Lifetime, the final Karawizawa release from No. 1 Drinks, has an RRP of just under £20,000. Whiskey fans see a tragedy, but Kirin saw things differently. Limited appetite for 2 distilleries, finite stock, not worth anywhere near today's sums, and clearer priorities elsewhere. It's not that Kirin can't spot cult potential, it's that it values strategy over sentiment. Apply that thinking to Four Roses, and this proposed sale makes total sense. Running a Kentucky bourbon and a Japanese whiskey isn't the same game, and Kirin has decided that it's better off playing one game really well. But who's going to buy it? Don't completely rule out strategic buyers like Diageo, Pernod Ricard, and even Suntory. All will at least run the numbers, although balance sheet pressure, overlapping portfolios, and political considerations may limit appetite. Private equity is also very much in play. Pritzker Private Capital acquired Bardstown Bourbon Company in 2022, and PE has moved into everything from wine to beer. There's also the option of a partial sale or even a joint venture, wonderfully echoing how Kirin's own Fuji Gotemba distillery first came into being. As for the sale itself, the FD numbers imply a price to earnings ratio of roughly 14 times. That's not a bargain basement multiple. That's the kind of premium valuation you'd expect from an established global player with growth potential. I suspect any final sale price will be lower, but it does make sense to start high and negotiate down from there. The appeal to a buyer is obvious. The Four Roses brand is respected but under-leveraged compared to rivals. Stronger US distribution could put it in front of more drinkers, while its unique 10-recipe system, with 2 new mash bills on the way, offers endless potential for premiumization and limited editions. International markets, especially Europe and Asia, remain ripe for expansion. There's also scope for more bourbon-based RTDs and greater investment into the Lawrenceburg distillery as a tourism and brand experience hub. I really think that Four Roses could grow in scale, prestige, and global reach. The key is whether the buyer respects that heritage while unlocking that potential. If not, its laborious recipes and inefficient single-story warehouses may be under pressure. Whatever happens, this is more than a bourbon story. It's a Japanese company trading breadth for focus, sentiment for discipline, and Kentucky heritage for big bets on healthcare, Nolo, and Japanese whiskey. Whether the gamble pays off remains to be seen, but this is a watershed moment for Four Roses, Kirin, and whiskey worldwide. Until next time, Kanpai.